Tony?
Amy, can you hear me?
Yes, I can hear you, Tony. Can you hear me?
Thank you. Yep.
All right. So hello, ladies and gentlemen. Welcome to the FNA 17th CBDC broadcast. As always, thank you for supporting our events. Of course, thank you to our guests for making the sessions as engaging as they are. Today, we have also another two fantastic speakers with us. But before I hand over to them, and while we are also waiting for others to join, let me do a very quick housekeeping. The CBDC broadcast follows a 60 minutes format. Roughly 40 minutes of that would be discussions with our guests, followed by short Q&A. If you would like to ask questions, please do so, but do not use chat functionality as it tends to get lost in that. Instead, there is a Q&A functionality at the bottom of your Zoom screen. You can click on that and then type in your questions. When we have time at the end, our guest speakers will cover as many of them as we can. Next slide, please. For you who joined the broadcast for the first time, let me do a very quick intro to FNA. So we are an advanced network analytics and simulation technology company. We work with 4 different sectors: central banks, commercial banks, FMI, as well as national security. So each sector uses our technology to uncover hidden connections and anomalies in large complex data sets to predict the impact of stress events and to optimally configure financial system and infrastructures. Next slide, please. And one of the key areas that we have been working for the past 2 years is on CBDC lifecycle solution. I remember that we started a research project 2 years ago in 2021. Also, we wrote a research paper to build an agent-based simulation model to assess the financial stability as well as the economic impact of an introduction of CBDC to the financial system. So since then, the agent-based simulation model has developed into CBDC lifecycle solution that delivers advanced simulation and analytics throughout the CBDC journey. So for example, on the right-hand side, the CBDC lifecycle solution can answer questions that central banks have with respect to, for example, how do different configurations affect CBDC impact at design stage, as well as at the post-launch stage, such as doing the monitoring adoption stage. A question like how is the public using and interacting with CBDC can also be simulated and then also monitored using the solution. Next slide, please. All right, now we are back to the main agenda today. So today's session titled The Future of Money, CBDCs and Beyond, aim to explore the potential impact of CBDC and alternative digital currency on the financial landscape. So today, this afternoon or this morning, we have invited 2 expert and distinguished speakers. Dr. Tony Richards and Sonja Davidovic will provide valuable insights into their work in the realm of digital money and its contribution to shaping the future of money. I'm also very proud to say that this is the first time, I think, in our CBDC broadcast that we have 2 speakers, both of them are based in Asia Pacific. So officially speaking, this is the first APEC version of the CBDC broadcast. So very happy and very proud to be here today to join you as well. So throughout the sessions, we will address key considerations and challenges associated with CBDCs, including technological considerations, regulatory frameworks, financial stability, and user adoption. We will look at the importance of international cooperation and public-private partnerships in realizing the full potential of CBDCs and fostering collaboration among central banks, payment system operators, and technology providers. So without further ado, let's start. How are you, Tony and Sonja?
Doing great, thank you.
Excellent. You are muted, Tony, sorry.
Good morning, good evening, everyone. Great to be here.
Yes, excellent. Yeah, thank you very much, Tony and Sonja, to be here. So maybe we can start the session by listening from you about your current work in the realm of digital money, including CBDCs, and how that contributes to shaping the future of money. Tony, are you happy to start?
Sure, Amy. So I'm going to talk later, I think, about what the Digital Finance CRC is doing in a project that they're doing with the Reserve Bank of Australia at the moment. But maybe I should just start with an introduction to the Australian perspective on CBDC, because it's useful background to what we're doing. So the Reserve Bank, which I used to work at the Reserve Bank, I'm no longer there, has been studying CBDCs for a long time. The governor first gave a speech about CBDCs in late 2017. And the bank's view has been that Australia's got a pretty good retail payment system. So it hasn't been obvious that there's a strong case for a retail CBDC in Australia. Australia's got a new fast payment system that began operation in 2018. It's called the New Payments Platform. And by international standards, our retail payment system is meeting the needs of households very well, households and businesses and government very well. So the Reserve Bank has not been convinced of the case that there's a strong case for retail CBDC. The Reserve Bank's been more open to the idea that there could be a case for a wholesale CBDC, that a slightly wider range of entities already has access to exchange settlement accounts or reserve accounts at the RBA than some other countries. But the Reserve Bank is open to the idea that there could be a case for broadening access to the central bank balance sheet to a wider range of entities. They're open to the idea of new technologies for accessing the central bank balance sheet. So they are more open to the idea of a wholesale CBDC than a retail one, I'd say. But as I say, they've had an open mind. They've done a number of projects on CBDC, largely in the wholesale CBDC area, and they're continuing to do work in this area. At the moment, the Reserve Bank has got a project going with the Digital Finance CRC that we can talk about, I think, later in the session. And the purpose of that work is to help the Reserve Bank, the Treasury, the Australian Parliament, to decide on whether there might be a case for introducing a CBDC in Australia. But at the moment, the RBA and the government hasn't reached a judgment that there's a case for a CBDC. And I think the feeling is that it's okay for Australia to be a fast follower in this area. We're happy for other countries to be experimenting or actually implementing CBDCs, and we'll see their experience. But we've got a very active research program going at the Digital Finance CRC, which I'll talk about later. So I might stop there, Amy.
Thank you very much, Tony. That is a very interesting intro, and look forward to hearing more from you about your current activities as well as your thoughts on the topic throughout the session. Now, let me move over to Sonja. So the same question, Sonja, would be happy if you can tell us about your current work in the realm of digital money, including CBDC, and how it contributes to shaping the future of money.
Thank you very much, Amanda, and thank you for the FNA for the invitation. Pleasure to be here with you today. And Tony, I look forward to the participants' question above all, because this is supposed to be useful for everyone that's on the call. I currently work as the advisor at the BIS Innovation Hub in Singapore, and I lead the Center's CBDC efforts. As part of that job, I co-lead one project and I lead another project. And both of these have been born out of a project that some of you may be familiar with called Project Dunbar. It's a platform for the settlement of multi-CBDC. And the RBA has been a core project partner in that project. The findings were published last year. And so you might wonder, what does it have to do with what I'm doing now? But I mentioned this as a way of background because out of that project, 2 projects were born, and both of them that I'm leading in my current role. So one of them is Project Mariana. And Project Mariana is the first cross-center, cross-BIS Innovation Hub Centers, a project that is looking specifically at FX trading and settlement, borrowing or leaning on concepts from the decentralized finance world and the use of a wholesale CBDC. It is a joint project between the Monetary Authority of Singapore, Banque de France, and Swiss National Bank, and the 3 centers, the one in Singapore, Eurosystem, and the Swiss Center. So that project is quite interesting because it's kind of pushing the envelope of what is possible and explores how the 2 worlds actually can coexist and really bring out the best of the 2 worlds in the context of improving, or with the aim of improving, enhancing cross-border payments in general. CBDC, the wholesale CBDC, is the settlement asset that's in the middle of this architecture, but it really is fully fungible, meaning it could be any asset that is traded, like a tokenized deposit or anything else that we envision in the future state of a financial infrastructure. So this is why I think this is one of the projects that really is at the cutting edge of like exploring how to marry the 2 worlds of DeFi and traditional finance or centralized finance, such as with the CBDC in the middle. And we want to explore there how can we move the needle on some of the goals that the G20 roadmap to enhance cross-border payments has set, meaning to improve transparency, effectiveness, and speed of settlement in the cross-border context. The results of this report will be published. We will have an interim report that will be published next week, in fact. I encourage you all to check it out. And then the final report will come out sometime in the fall. We're targeting late September, but of course, we will keep you updated as we go along. The second project that I work on is also based on the findings of Project Dunbar, and it's sort of looking at the regulatory and policy interoperability element. While Dunbar was great in showing that it's technically feasible to build such a platform, it really hasn't. It had to scope out a lot of areas that are vital for cross-border payments, including compliance with regulatory and policy measures. So this new project, it is not yet in the public domain, so I cannot share a whole lot of details, but just a hint, sneak preview will be about enabling policy and regulatory interoperability to the greatest extent possible, figuring out how technology can help us automate, streamline, and make regulatory compliance more efficient across the 4 jurisdictions that we will be working on. The moment it's 4, it might be more. So as this project unfolds, I'm happy to share with your members and the general public what we're thinking about there.
Yes, thank you very much, Sonja. That's a very interesting intro as well. So with the second project that you mentioned, that hopefully will be launched soon, I'm very curious what will be the name of that. So I think BIS always comes up with a very cool name: Project Dunbar, Nexus, Mariana, and I will look forward to the next one. So yeah, and also look forward for the both interim report and then also the final report for the Project Mariana. All right, so now I'm going to move back to Tony. So Tony, you mentioned during your intro about some of the initiative that Reserve Bank of Australia has been doing with DFCRC. Can you tell us about that, or can you tell us about some of the updates, and also what are the lessons learned that people or all the attendees here can learn as well from the initiative?
Sure. Thanks, Amy. So it's a project between the Reserve Bank of Australia and the Digital Finance CRC and the Commonwealth Treasury. So the Australian Treasury is also participating because it's important. Ultimately, decisions whether there are issuance of CBDCs will be ones coming from government. So I'll just tell you a little bit about what a CRC is. CRC stands for Cooperative Research Centre, and they are It's a program that we have in Australia where we have where it's a public-private public-private research efforts that involves of industry, government, academics, and they work on commercializable research. And there's a CRC, so a Cooperative Research Centre, was set up about 2 years ago that's focusing on digital finance. So the project that we're doing, there's a lot of thinking in the abstract about what CBDCs could imply for retail payment systems, for financial stability, etc. And we'll probably touch on these a bit later. And there's also technology projects to see what CBDCs could do. But there's not that much work that's been done to shed light on the question of whether there really would be demand for a CBDC if it was out there. So our project is trying to answer the question of how a CBDC would be used if the Reserve Bank was to issue a CBDC. So the three questions that the project is asking, three research questions, are: what, if any, are the emerging business models and use cases that a CBDC would support that are not effectively supported by existing payment and settlement infrastructures in Australia? Second, what might be the potential economic benefits of issuing a CBDC in Australia? And third, what operational, technology, policy and regulatory issues might need to be addressed in the operation of a CBDC in Australia? So we're trying to do learning by doing and seeing what use cases there could be for a CBDC in Australia. So we called for submissions on possible use cases late last year. There's no presumption as to whether or not they were retail or wholesale use cases. They're only for domestic entities, so there's only limited ability to use the CBDC for cross-border payment uses. We had a lot of submissions. We had a fairly rigorous selection process, and it's not a straightforward exercise for entities to participate in the pilot. And in the end, we selected 15 use cases. A wide range of entities are involved, both large and small entities, some of the largest banks in Australia, but also so there's the established financial institutions, but also some smaller fintechs. And the pilot involves real claims on the Reserve Bank of Australia, and there are real transactions with real customers, and the entities had to go through, make sure that they had the required compliance with Australian regulatory requirements. Most of the use cases are taking advantage of the ability to use smart contracts and atomic settlement with CBDCs. So, for example, use cases that have got the CBDC as the settlement asset in trades in tokenized financial assets, various forms of tokenized assets. A second one is making conditional payments, taking advantage of escrow or hold functionality in smart contracts. Other use cases involve using automation, getting greater efficiency in particular payment flows, particular existing payment flows. For example, superannuation payments. So that's retirement income payments from households to their superannuation fund, or the automation of tax payments, for example. But we've also got one use case which is looking at offline payments and P2P payments. And then we've also got use cases that are using central bank digital currency as backing for an Australian dollar stablecoin. So there's a very good mix of use cases there. At the same time as we've got the pilot going with actual transactions running, we're also engaging very actively with the many entities that made submissions to the program, but weren't in a position to participate in the pilot. Now, we're very happy with the way that the project has gone. There's been great interaction with all the entities that have made submissions. We are learning a lot from the operation of the pilot. I think the entities that we're working with have also learned a lot. We've got a report, there'll be a report coming out within a few months. And I think the obvious conclusion is that if there was a CBDC out there, there would be lots of use cases that could take advantage of it. The question of whether there's a policy case for a CBDC is not one that our pilot program is supposed to answer. That'll depend more on a broader assessment of the risks and costs of the CBDC and the benefits. But we've been very happy with the way that the project has gone and engaged a range of entities in Australia, and we've learned a lot about the potential use for CBDC. So I'll stop there, Amy.
Yeah, thank you very much, Tony. Yeah, I guess that is a very interesting update as well. I really like the concept of public-private collaboration as well, that you are trying to also hear from. You mentioned about fintech, you mentioned about large financial companies, for example, to explore different type of use cases for the retail CBDCs in Australia. Yes, we will continue to talk on that with you, Tony, because I believe there are many attendees here who like to understand as well more about the initiative, so they can learn as well for their own jurisdiction. Now I'm going to move back to Sonja for now. Sonja, you mentioned about some of the projects that you have been dealing with, some of the initiatives that you have led, Project Lumber, you mentioned as well, Project Mariana. We also heard about Project Nexus, for example, that BIS Innovation Hub Singapore leads. So my questions for you then, how do you envision the scalability and interoperability of digital money, including CBDC, in facilitating cross-border transaction within Southeast Asia region, but also importantly beyond the Southeast Asia region?
I think Nexus is a great example of a project that is closest to reality as possible, because it's really not envisioning like a setup of a new architecture and infrastructure, but rather it's piggybacking on what's already available. And most countries in the ASEAN region already have well-functioning instant payment systems. So Nexus is just helping connect them in a meaningful way, avoiding bilateral linkages as opposed to connecting in a multilateral fashion, so that these systems become scalable beyond just the Southeast Asian region, but beyond that, looking at other regions in the world. Now, my colleagues that have worked on Nexus are probably, I would say, closer to production than any of the other BIS projects. There's another project, Project Rio, within the Swiss Center that is equally close to graduation. But yeah, I think it's we're entering a phase now within the BISH environment where we're seeing these projects graduate into something of a more real life example in production. Now, of course, we still have to do a lot of homework, and this is what the team is working on very hard to ensure this interoperability. And part of these, there are thematic areas that the project has to focus on, and this latest phase that the project has entered just recently, a few months ago, after the blueprint has been published. And those pertain to governance, meaning how do we govern such an arrangement? It's particularly complex. And those also apply for any CBDC arrangements. I think Dunbar sort of introduced like rough sketches of what a governance model could look like. But the devil's always in the details, as we say. So nailing down those details is something that Nexus will be helpful for, not just for the instant payment realm, but also beyond that for CBDC arrangement as well. So we're trying to exchange knowledge as much as possible. The second thematic area that matters for enabling this cross-border interoperability or enhancing cross-border payments in general is the FX liquidity. How do you manage FX in that context? How do you ensure that there's enough liquidity, especially for less liquid currencies? And certainly in the Southeastern Asian region, we do have a lot less liquid currencies available. So for Nexus, it currently relies on the existing correspondent banking model, but our hope is that through projects like Mariana and many more that will come, we can move the needle there and improve how liquidity is provisioned and how liquidity is traded across borders. So we need a better approach to that, more transparent, faster, and more effective in general. So hopefully, we'll be at a stage where we can integrate these projects so that we can see meaningful movements for FX management as well. And the third area I would say is the policy and regulatory interoperability piece, which I will take up as part of this project, or the center will be leading that effort. And while we certainly don't envision to achieve policy and regulatory harmonization within the scope of the project, as this is a long-term endeavor that takes a lot of time, we do want to see to what extent we can utilize technological solutions to automate and streamline some of these compliance processes that exist. So for this piece of infrastructure that we're building, we also see potential for having it be sort of a base layer or a foundational element of an architecture that other projects can build, could be built on top of. So Nexus, one could presume that potentially at a later stage in time, Nexus could be operated on such a foundational piece of a technology stack so that we achieve the regulatory compliance by design within this foundational layer and alleviate the burden on upper layers of the technology stack so that Nexus can really focus on what it's good at, and that is the retail interface, the retail facing piece that matter a great deal for end consumers, meaning you and I, like the regular individuals on the street, and leave the regulatory compliance within the hands of the central banks that are most equipped to handle such if you will, mandates, and bake it into the design of this architectural piece, which should be ideally be fully fungible, meaning that Nexus, but also other retail CBDC systems or even legacy systems like RTGS would be able to reuse for their purposes. So that's kind of how we think about it. We do think that not one project can solve it all, but rather like a divide and conquer approach is what we've been working on so far. So now I think it's a time where we're kind of entering a phase where we want to put all the pieces together and see how each of these layers can tackle one of these themes that matter in a cross-border payments context.
Mm-hmm. Yes, thank you, Sonja. So I'll stay with you and then also try to ask more. You mentioned several times about technological considerations, architecture. So in fact, this is one of the key points that our audience frequently asks. So my next question would be on technological considerations associated with a CBDC. What do you think will be the collaborative efforts and standardization measures that are necessary to ensure global compatibility?
That's an excellent question because truth is we have a lot of regions, a lot of jurisdictions working on their own, cooking up their own little thing, like be it a CBDC or a better functioning instant payment system or whatever the case may be. So we do really have to think about like what are actual sort of common points that may connect all of this in a future state, because I don't think anyone bears the illusion that there will be one architecture, one infrastructure that will host this plethora of payments and CBDC systems out there. So apart from the technical standards that are slowly emerging and that matter a great deal, I think that these policy and regulatory standards are also going to play a critical role. I'm less concerned about technology because the technology is there. It can really achieve a great deal already, as we have shown through the multi-CBDC arrangements like Project Dunbar or Enbridge, or even Project Icebreaker in the retail CBDC domain. But we have to move past the point of this technical feasibility aspect and building standards at a technical level, because some of these standards already exist in some shape or form. I mean, maybe not for all segments of CBDC, like offline CBDC is one area where standards are still missing, but payment standards already exist and they might be repurposed. But I'm thinking more about the criticality of standardizing how we're doing financial integrity checks, for example, because one of the main stumbling blocks that we see now is like that stakeholders are doing multiple KYC checks on the payment chain, slowing down the process. It's a huge administrative burden and a cost and risk for the participating entities. So standardizing this or harmonizing this across the board might help alleviate this, right? But to get there, we still have a long road ahead, because there's just jurisdiction-specific intrinsic differences that are reflected in the legislation, in the legal framework of a country, and we shouldn't just assume that that they will be harmonized completely, but rather try to get to a point where we're standardizing, the main building blocks or the main foundational elements of this regulatory and policy structure, so that we can achieve the best possible outcome for a payment to go, or increase the success of a payment going through across borders. Now, the BIS Innovation Hub is not a standard setting body. Those are our colleagues at the CPMI, FATF, and so on. Their task is to achieve the standardization within the regulatory and policy realm. But certainly, as we're doing our project work and we're getting insights from that work, that hands-on work, we are rallying that information back to our colleagues at the standard setting bodies to the greatest extent possible, informing their work, informing their decisions and their output. So there's a feedback loop that exists within the international community that is engaged in the G20 roadmap to enhance cross-border payments, where we try to the greatest extent possible inform each other, so that these standards, as they're developed by the standard setting bodies, actually reflect the reality on the ground, right? Like, I think we have to be realistic about how much we can go with standardization. I don't think that we will be able to standardize and harmonize everything that pertains to payments, but certainly there are areas that are more amenable than others, and that's part of the task that the standard setting bodies have been, it's within their purview, and we are working with them closely to feed some of our findings into their work.
Yes, thank you very much, Sonja. That's a very comprehensive and useful insight, I think. So now I'm moving to Tony. So I would like to ask a question, as we know that the concept of retail CBDC gains attention, Tony. What are and also I remember so before that I remember that you have a very interesting paper, I think, that you wrote probably last year about the initiative, like some research questions, some of the key consideration as well as challenges for the high income countries, if I'm not mistaken, with respect to retail CBDC as well as the wholesale one. I think we can also share that in the chat so that the attendee can also look at that. Now, my question to you would be, can you tell us about what do you think would be the key considerations and challenges of retail CBDC with respect to ensuring financial stability, monetary policy effectiveness, as well as user adoption?
All right. Okay, thanks, Amy. Well, the paper that you referred to was in the chat earlier. Okay. I think one of the first documents in the chat. So I suppose retail CBDC. Well, there is the question of, would there be a demand for retail CBDCs? I think we can't assume that there would be. There's the well-known question of whether or not CBDCs could be a solution in search of a problem, and they might be in some economies, but they might not be in other economies. But the general point is it's not easy to introduce a new payment method. You need to work on both sides of the market. the payments are a two-sided market. So there's a lot of work to be done to think about introducing a new payment method. And I think the ECB's got their work program illustrates that they're working on a scheme rule book, for example. They're thinking about the economic model that might support issuance. So they have a very extensive work program that I think reflects the fact that you can't assume that there would be demand. And indeed, my sense is that those CBDCs that have been issued to date have actually had very limited take-up. So, it's possible that they might have benefited from a bit more work on the user experience and actually ascertaining whether there was demand and how best to stimulate that demand. But of course, we also have to consider the possibility that there could be too much demand. For example, we might find that very strong demand for CBDC threatened to significantly change the structure of our financial systems in ways that we might not be comfortable with. And I think there was a question in the chat earlier that talked about, are you worried about concentration of powers in central banks? And I think that was probably referring to the possibility that that there could be a significant reduction in financial intermediation in the economy and a shift of deposits from traditional financial institutions to the central banks. So, and that's something that many economies wouldn't be comfortable with. So, for example, the European Central Bank is thinking that is talking about any CBDC that might be issued with holding limits. So the number they've talked about is 3,000 euro per person. Plus the ECBs, like most other central banks, are talking about retail CBDCs probably not bearing interest. So they wouldn't necessarily be competing directly with traditional bank deposits. So the general thinking is that if retail CBDCs would be introduced, they would be intended as a new means of payment, but not intended to be a major store of household savings or wealth, because that could result in major changes in the financial system. Then, of course, there's the possibility of major shifts into CBDC during times of uncertainty. The well-known problem that bank runs could potentially be easier in a world of CBDC. It's very easy to shift from an electronic claim on a bank on a commercial bank to an electronic claim on the central bank. It's a lot easier to do a bank run in a CBDC world than it is to do a bank run in the old world where you have to stand in front of an ATM machine and try to get cash out. So I think the big question for central banks, in addition to saying would there be a possible use? Are there important use cases for CBDC? I think the big issue for central banks is the possible effect on financial stability. You talked also about the monetary policy. I personally think that any challenges for monetary policy implementation should be solvable. Monetary policy currently works through the rate of interest on overnight lending between banks. It doesn't work through banknotes. So I don't expect the fact that households might one day hold electronic banknotes will necessarily be a problem for monetary policy implementation. That's a personal view, but there's no doubt there's more work in this area, but I think financial stability is the major issue that policymakers need to think about. Then, of course, there are the broader issues about privacy, etc., which, if we've got time later, we can talk about those. But I expect that those problems will be solvable. And one thing to note is that central banks in all the major industrial countries are talking about, if they were to do CBDCs, retail CBDCs, they're talking about 2 tier ones, where the central bank wouldn't be seeing the details of the household accounts. The KYC, all the account servicing would be done by private sector providers, presumably including banks, and the central bank would just be responsible for the settlement aspect. So I personally don't think that I think privacy concerns are significantly overblown. But there's obviously going to be a lot of debate still in our economies about those issues.
Yes, thank you very much, Tony. So I still have some of the questions for both Tony and Sonja, but I will just move to my final question, mainly because I saw so many questions in the QA box and chat box, and somebody also raised their hand. So I think this is one of the most popular CBDC broadcasts so far. Yeah, so many attendees and also questions. So my final questions, I think I will address that to you, Sonja. So beyond CBDC, what are the other potential options and innovations being explored for the future of money and payments? And how can these new forms of digital money contribute to financial inclusion and the transformation of the financial ecosystem?
So let me look into my crystal ball. Just joking. It's very timely, your question, because just today, chapter 3 of the BIS annual economic report was published. That gives a peek into the future, like that gives us a glimpse of the crystal ball of what that future might look like. And it's the future all points to a tokenized world, a world where tokenization of not just CBDC, but really a whole plethora of financial assets will unfold. CBDC is critical there because it will help, in my view, it will help spur that tokenization. But I do think that as we have many means of payments today, so we will have in the future. So we will have use case specific applications for the use of different tokens that we have available to us. I do believe that central banks will realize that issuing a CBDC is a very complex endeavor, and that is very hard, even for the most advanced projects, the most well-resourced central banks around the world. It's quite an undertaking. So I think we will see a future where central banks will retract to their traditional mandates and see that they maintain, well, there will be a CBDC. Certainly, I do think that the role of central banks within the CBDC setup will be a reduced one. So potentially we'll see something where a CBDC will be used for the settlement and central banks will have improved regulatory and supervisory outcomes in terms of like being able to monitor better how CBDC is used in the financial system. But a lot of the retail-facing pieces will be outsourced to the private sector simply because they have a competitive advantage in how they've done KYC, how they onboarded users, and all these things that are not within the traditional central bank mandate. Yes, there are two-tier models even now for most of the retail CBDC projects out there, but I do think that it's possible that instead of a CBDC at the retail end, we will see an instant payment system or a tokenized deposit that is being used by the end user to pay for goods and services. So a wholesale CBDC could remain in the back end for settlement, but the retail piece could utilize a different asset, not necessarily a CBDC. Because the moment CBDC is involved, and some of the questions hinted at that, it raises all sorts of questions around privacy, which strangely enough, people don't ask when we talk about deposits, bank deposits, right? So the tokenized form of a bank deposit may equally raise privacy concerns, but yet people seem to be more concerned about a central bank intruding into their privacy there. Whether that's legitimate or not, like yet to be seen. It's certainly for countries that are, or of less. I don't want to use an appropriate expression, but one could envision that CBDCs could be used to sanction their citizens, and in those instances, concerns around privacy are well taken. But certainly not in democracies like ours, where there are rules and checks on institutions, including the central bank. So I see less of a concern there. But yeah, the future is definitely one of tokenization. And no matter which product or which asset we're talking about, in the digital realm, we all leave traces. So no matter what the privacy enhancing method is, or rules and governance models we build around the data that is being collected, there is always going to be a way, this is my personal opinion, I should caveat, there's always going to be a way to trace it back to an individual, to trace it back to a specific transaction, because we have sophisticated machine learning models that can help build knowledge graphs and could help dissect that data and trace it back to an individual. So I'm a bit of a skeptic when it comes to having air and watertight privacy enhancing techniques that will preserve user privacy 100%. So it's just my personal view. But in terms of the future, privacy will remain a concern in a tokenized world. For the future, though, I think that we're headed into a direction of a tokenized world. The Web 3.0 economy is already giving us a glimpse into that future. And I think that central banks will play a greater role in that economy, because as we're paying for in the digital Web3 economy, we are currently, or users are currently using stable coins to on and off ramp into the world of NFTs, or non-fungible tokens. But I do presume that central banks will take over that role, that it will be the reference unit that will be used in the Web 3.0 economy. So that is something that will evolve very quickly. And with that asset, or the reference asset, and the safe settlement asset being used in the Web 3.0 economy, we will see a whole lot more tokenization of various financial assets, entire markets that will be tokenized, as central bank money is also being used by financial institutions. So they will be more inclined or more encouraged to tokenize their assets as central banks tokenize their money in form of a CBDC. And I'll stop there. There are lots of interesting questions. I also took a quick peek. I actually had to chuckle at some point because somebody commented on the naming convention. So if you saw me chuckle, it wasn't about anything that Tony said. It was about that question. Yeah. That is quite interesting, and it garnered so much interest.
Yeah. Okay. Thank you very much, Sonja. So there are quite many questions, right? As you see on the QA and then also on the chat. Some of them, I think, partially have been addressed by some of your explanation previously. So I think I would like to pick, the questions that Anis Basra has just put on the chat, right? So I think, what are the lessons drawn from that journey for Australia as well as other countries when a country would like to be ahead of their CBDC pilot?
I can have a go at that one, Amy. I'm not sure that I'm in a position to draw any lessons from the Chinese CBDC pilot. I know the issuance is still pretty small, but I think possibly the one insight is they've taken a lot longer to move from pilot towards issuance, and we still don't know if they're going to move, if they're going to take an issuance decision. So that might be telling us that it's a challenge to introduce CBDCs, and it's the sort of, there are a lot of issues to be solved, and the fact that the Chinese are moving slowly probably isn't surprising. So that's one of the lessons, is probably we shouldn't be in any great hurry to introduce these things until we've really sorted out all the risks, as well as thought about all the benefits.
Yes, thank you, Tony. Anything you would like to add, Sonja?
I just wanted to add, I fully agree with Tony. It's not a matter of being first. Certainly it gives an advantage in terms of setting standards. But I think the complexity of the endeavor warrants a cautious and prudent approach. And our hope is that the BIS Innovation Hubs provide a safe space for countries to experiment with novel technologies and to hopefully assess the relevance and the extent of some of these risks that we're faced with. and find appropriate measures to mitigate them. So I think that was a mandate actually under which BIS innovation hubs have been set up to provide the safe space for central banks to use the technology without introducing a product, launching a product in the real world, and helping them navigate these new technological developments, but also assess the risk to the greatest extent that it's possible within such a contained environment.
Yes, thank you, Sonja, as well as Tony. So there is also, I think, an interesting question from Q&A box, right? So when we speak about the future of finance, for example, we mentioned about the interoperable connectivity across countries, like cross-border transactions, for example, with Project Nexus. And one of the key challenges is also for fraud and anti-money laundering. So there is one question now mentioning another project that BIS Innovation Hub has, that is on Project Aurora. So it's asking if you are happy, Sonja, if you can speak more about that, in which it says that it shows graphs, machine learning being best for detecting fraud and also money laundering.
I'm not intimately familiar with the project, but certainly Aurora is one of the projects that introduces novel or emerging technologies to combat fraud and ensure the financial integrity of transactions. I'm happy to, actually, you should read the report. It just came out a few months ago, and familiarize yourselves. The work doesn't stop there. We have more work on the way to tackle financial integrity specifically, because that is common to any cross-border transaction. In fact, this new project that I will be leading is looking at not just how do we perform monitoring ex post, but rather how do we build compliance by design within the product, within the architecture, so that we don't have to spend resources and time in doing ex post validation and monitoring, but rather have something that already embeds the policy and regulatory requirements, so that our task as central banks have a less of a burden in terms of ex post monitoring and supervision. That's kind of my answer to that, but I'm happy to connect to whoever's interested, to colleagues in the Nordic Center, to give you more specific details on Project Aurora.
Yes, thank you very much, Sonja. So I think I will pick a final question before we close the sessions. So it's for you, Tony. So the question is, can you speak more about the offline capabilities and inclusivity considered? And are there any lessons learned you could share? And also, do you see cash disappearing in the future?
Okay. All right. Too soon for me to give any conclusions about the offline use case that that's included in the pilot. So I can't give any more details on that, but I just make the general observation that when you're looking for use cases for CBDC that are not being met by the current financial system, the ability to do an offline digital payment. So, for example, in a country that's got in a country which has got a lot of remote population where communications are unreliable, etc., offline payments could be very important. In countries that have natural disasters, etc., offline payments could be very important. So, I expect that would be one of the use cases that governments would weight pretty highly in any decision to introduce a CBDC. And I think that'll be the case in Australia. On cash, it's very clear that central banks all around the world have said that CBDC would be implemented as a complement to cash, and it's not meant to replace it. We in Australia recognise that there are a significant part of the population that still find cash meets many of their payment needs, and a small fraction of the population use cash for most of their payment needs. And as long as there is a demand for cash in the population, the Reserve Bank will continue to provide, will continue to support the cash system. So cash is here, and CBDCs are not about trying to reduce the role of cash.
Yes, thank you very much, Tony. So I think that will be our last questions for today. And thank you very much again for your insights, Sonja and Tony. So for everyone, I know that probably we cannot cover all your questions today. So we put the contact of Tony and Sonja, sorry, in the chat, so you can connect with them and asking them your questions as well. So coming up next, we are going to have another broadcast, but it will not be on CBDC. It will be on subtech, in particular on rethinking cyber resilience in finance. So if you are interested, you can please do sign up and then also join tomorrow's broadcast. And June 29th, we are having another CBDC broadcast. With the title is Retail CBDCs, Is There Potential to Be Unlocked? So again, thank you very much, everyone. So I hope to see you next time. And again, thank you very much for both Tony and Sonja. We learned very much from you today, and very happy to listen and also have discussions with you today.
Thank you.
All right. Thanks very much, everyone.
Bye, everyone.
Bye.